What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm looking at the Clear Pad, which is a new pad split on Mogul. It's in Houston, Texas, 8 bedrooms, 3 baths, a little over 1,700 square feet. Um, they have some fantastic, their average yield, which, we've talked about this a little bit. I don't love the idea of average yield. I wish they showed you the year one yield, but their projected year one yield is, 13.49%, something like that. So it's still a fantastic year one yield. And, this is a good example of why I don't love when you look at average yield. If your internal rate of return is 15.9%, you know, showing something that's a higher average than that just doesn't make a ton of sense, right? Like, I mean, it is a number that is meaningless to you because your actual return is going to be lower than that average yield. So that's just because, far out in the future you might have a high yield, but it's not, it's obviously not creating a great return, that it's not pulling your return up that high, right? So I don't love that they use that metric. I know I've complained about it a few times. I wish they would just put your year one yield there, and then your IRR. I mean that they're pumping out like they're giving you fantastic numbers, and so, I think this is one that I think is kind of a silly one, and I see people use it when they don't have great numbers to show you. If your year one yield is trash, then I can understand why I want to do this, but they should be really proud of 13.5% basically. So I'd like to just see that on there. I don't know. Anyway, the purchase price on this one I think is 325 or 335. I did look at the contract. It looks like the one they have uploaded right now is not a signed contract. Um, this property isn't officially live yet. This is like their pre-launch or their VIP launch or whatever they call it. So I got a hold of it early, and I really appreciate that they do that. But so I'm not going to hold it against them when they don't have every single document ready yet, right? So this is not a signed version. Um, Maybe that means they're still negotiating it. They don't have their residential leases box which they should have a lease in place with Padsplit, I would assume. Usually when you have the Padsplit model, you do. So I don't know what's going on there. I'd expect to see that addendum, but like I said, I mean, maybe this is just still in progress. But I've looked at several of their Houston properties, and so if you look at the on my channel, there's a playlist for Mogul where and it basically it's just all the videos I've done on Mogul properties. So if you look at the other Houston properties I did, I think if you start with the Axelrod, that's the first Houston one I bought, and you can see my thoughts on the Houston market in general. It's a market I like a lot. That's why I've bought uh, at least a couple of their properties in that market. This will be the first pad split because it's the first pad split they have there. If I buy some of this. Um, but it is, this is a different part of town, and so I'm going to show you a little bit about, like where it is and everything. One of the things that I thought was interesting is you can see it is well, let's do that first though, right? Like let me back up. So we're northeast of downtown here. I lived in Houston for a year and a half or so. This is not a part of the, I lived south on the south side of town, and I commuted to downtown. So this is not a area I'm terribly familiar with. This is not the market that I'm active in every day, but I spent some time, just doing the little street view, walking around. It is nice that the subject property is um, right across from a park with a little trail, a little track. You can see this is an old picture where it was sort of attached to the property next to it. I found an old MLS listing where they were being sold together, but it does, from my brief research in the public records, I believe it is two distinct properties, and they were just trying to sell it as a package. Maybe they'd subdivided at that point in time. I couldn't tell. I didn't dig into the history of it enough, but it does. If you look at the pictures now, it's not. It doesn't have that shared stair anymore. It does look like it's physically separated. And when you look in the public records, it looks like they're distinct properties, as far as I could tell. Um, so, digging into the area, I did look at the FEMA flood map. It looked like it was fine. That's something you want to do on every single property. Remember my goal here is to share my real estate knowledge, show you how I look at deals, and do due diligence, not for it to be your due diligence, right? Like, so you want to check all these things, you want to dig into them further. Hopefully, you're not making purchases based on a 30-minute video. Hopefully, I'll keep it to 30 minutes today. But so yeah, something I checked, but you want to check that every time. I didn't dig into the FEMA, natural disasters or hazards map again because I've looked at that on other properties that I've looked in Houston. Um, is that general market research? You want to do again. Let me see. It was, the spot crime map. This was a little concerning to me. If you remember when you use spot crime, you always have to look and see how long it took to generate that many crime reports. And it's not very far back, right? I mean, it's like less than 2 full weeks to generate what's a pretty dense map, right? And like sometimes when I zoom in, I'm like, oh, well, there's nothing right by the property. Unfortunately, there's a lot of stuff that's pretty close. One of the things with the pad split model, where you're renting by the room, you're very often providing some of the lowest cost housing in the area. And so sometimes that comes along with, higher crime rates and that sort of thing. But it is something that you just have to decide, like, is that a risk that you're willing to take with an investment property? There's not any gunshots like there were in some of the other properties we've looked at. But again, this is only showing 2 weeks of history, right? So that was the one of the first things. This is a little concerning to me. I know though, Houston in general, there's a lot of places, a lot of parts of town where you can do perfectly fine with your real estate investments, but when you look at the crime maps, it looks like it would be an issue. So, and we ran into that in Atlanta as well. I'm going to close that because my computer seems to be struggling. Yeah, I wanted to get into. I'm jumping around a little bit too much, so let me go back to the property itself. Um, that we skipped the market. Yeah, I looked up the real property records, and it does just indicate the one home. It's got the right square footage. This they're the same, which that's very important to me, especially in Texas. We did see that maybe was not as big of a deal in some other places. That's a learning experience for me. Um, Close that map as well. This is one of the things that I'm going to dig into a little bit further. You see this estimate 207. Remember, this is under contract for 335. They do have the right square footage. They've got 4 beds, 3 baths instead of 8 beds, 3 baths. But that's because with the pad split model, they make a lot of the common areas, they convert it to bedrooms, right? So you might not have a living room, dining room area. That might just be bedrooms. Some of the bigger bedrooms might be cut up into smaller ones. So, they have the right square footage. So this was concerning to me, right? But you have to remember, I don't know if you've been watching my channel for a while. Just yesterday, I put out one about highest and best use and ways that we can value properties. And this is one that I'm having a challenge with. From a yield perspective, this seems like a fantastic deal, right? Year one yield of 13.5%. It's very exciting. When I start to dig into the value that comes from a sales comparison approach, which is how usually single family homes are going to be valued, it seems like we're going to come up short here, at least as far as what I'd want to pay for an investment property here. So I'll show you so this estimate was very low. Um, the, when I looked on Redfin, their estimate also quite a bit lower than where we're at, 211 to 251. Um, This is a market that I have. I'm going to get back to this. This is the pad split map. This is a market that I have MLS access in. This is the last time this property sold. It was in 2021, and at the time it needed a full renovation. So it was not it doesn't look like it was a pad split then. It definitely needed to be renovated. Maybe it was, but it wasn't, didn't look anything like it does now. Let me show you that again so you can remember how nice this property looks. Oh, let's see. It does, it really is a higher end renovation than we've seen in some of the pad splits that we've seen. It looks really nice. Um, got wall mounted TVs. I didn't even notice that in some of those. I don't think those would be I wonder if those belong to the tenants or not. Maybe not, or maybe they do because I have a mount here but no TV. So that's interesting. But you can see, it's a very nice looking property on the inside. It's not, it looks like it has been renovated since that $181,000 sale. But it made me, because I saw the Zillow and I saw the Redfin, it made me want to dig into like, well, what are the actual sales that I can find? I've got MLS access, pulled up everything in the subdivision. I'm looking at everything that's over 3 bedrooms, 2 bathrooms, or 3 bedrooms, 2 baths, or bigger. And then plus or minus 200 square feet from the size, so 1528 to 1928. Um, it brought up, quite a few properties uh, that are, quite a few for sale properties that are competing, and then, not a ton of sold. So that's one thing that's concerning. There's a lot more properties for sale than there are sold listings. It's not a great sign, right? A lot of times that means there's going to be some downward pressure on pricing. But I could not find there are very few sales. Let me actually pull up. Can just move that picture there. I was trying to close every extra window because for some reason my laptop's struggling. Um, if you look, not a lot of sales, right? 7 sales compared to 15 active listings. Um, and so I'm looking at the last 6 months, right? So 7 sales in the last 6 months, currently 15 active listings. So that means we have about a year of inventory sitting here. But you have 3 pendings, so maybe a little bit less than that. But not a great sign as far as that goes. But if you look, all of these Sunbury Street ones are all, it was 9 homes that were all built in one little development. So, if we took those out, it looks a little bit different. And they've sold, it looks like they sold 3 of those actually. Um, all new construction. And most of these sales, so that's the other filter I used is 2010 or newer. The subject property is 2014. Um, but most of these are even newer than that. There's a lot, 2003, 2000 or 2003, 2023, 2024. So a lot of stuff that's just a year old or less. Um, you know, so this was very concerning to me, right? Like if you look at actual solds, 279.9 is the highest sold. Of the pendings, you've got again 279.9. Now it's possible that these went for over list price, but I doubt it because of how long the days on market were. Um, some of these are larger properties than the subject property. A lot of them are 2-story properties, which I think for pad split, your 1-story property is going to be, you know, preferable. So it's not like you could just buy any one of these properties and make it a more, a similar competing property. But you're certainly, so this is one of the things I'm always thinking about, right? We talked about this a little bit yesterday, is like what are my alternatives to buying this, right? Could I buy this 2024 built 100,000 square foot large, or 100 square foot larger home? Could I buy this, cut it up into 8 bedrooms and add 1 bathroom, right? Okay, that's quite a bit of work. But could I do that for $100,000 and have a brand new product? I think I could probably do that for half that, right? So, but then you have a year of leasing it up, right? So one of the things that they are getting the benefit of is that they're not having to do that year one lease up, so they're getting their returns right away. Um, and so that's one of the reasons why when the valuations seem pretty close, I've been okay with it. I think it's a little bit of a trade-off, but this is one that I think is a little too far for me, right? It is just let's see. This one I think is, yeah, it's one of those brand new construction homes that are just uh it's just really, when you have a 10-year-old home, even with a nice renovation, it's hard to compete with brand new. I didn't notice if they had any sort of um, builder, additional concessions, which sometimes you will get with the brand new construction. But let's see, what did I want to? I wanted to show you one other one. I think it's this Ethel Street one. That's the one I just showed you, right? Yeah. And the other one is this? Yeah, I think this is the other. No, that's not a single story one either. But anyway, looking at these comps, it's really hard for me to get to the 335 price point. And then, when they're looking at a sale, and let me go there. When they're modeling the sale for this, the sale price is based on taking the current property value and applying an appreciation rate. Now, if you'll notice though, they're only using a 1% growth rate here. Some of that might be because of the neighborhood. Some of it might be an acknowledgement that they're overpaying from a sales comparable approach, position. And so, okay, it's going to take a little while for the value to actually catch up. And I know I've talked about this a little bit with the pad splits in the past, is um, as this becomes a more and more normalized use, investors are willing to pay for that yield. If that yield is really high, if we sell to the next investor, it's possible that we also get the same benefit that we're taking advantage of when we buy here. So it makes me want to discount the sales comparison approach a little bit, but at the same time, at the end of the day, this is a single family home. It's the square footage and the location are going to be the two largest factors. Um, if you were going to try to sell this to owner occupants, you'd have to convert it back, which would just be a pain. So, presumably you'd keep operating it like this. But it's just, one of the things I'm sure you've heard me say before, like, yield is temporary and your basis is forever, right? Like, and so it is, uh, it's fantastic that you're stepping into very high yield day one. And, this isn't like the lofty properties where they're sort of creating these fake yields and it's not fake, but where they're, doctoring the yields with some financial engineering. I mean, this is just a normally leveraged investment property. They are using, let's see, let me go to the other one. Oh, come on. They are using a cash out refi as part of their model. Um, Not until year six. Is that right? Yes. What are they cashing out? Yeah, and it's not a huge amount they're cashing out in year six either, right? So they are using that as part of the model. Um, it doesn't take it's not a huge, year four is your break even point, right? Is that what they've got for break even here? Um, or wait a minute, do they do it? Oh, no, 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 sorry. 40 months break even. I don't know what I'm looking at. The little thing moves around when I'm doing that. So sometimes, yeah, 40 months to break even, and then you start to go up, and then to break even from the refi is this year five spot. I don't love how that moves around and like covers where I'm trying to put on there. I wonder if that's just on my computer or if that's everybody sees it that way. Anyway, so this is one where it's not a great fit for me because if you remember, my number one thing is I don't want to lose money. If I become a forced seller, I'd like to have equity day one. I know for most of the mogul ones, that's not really realistic because um, they're addressing that risk in a different way, right? They're addressing it by having, proven in place income. And so if I'm okay with the valuation, if I think we're close, if I think that I'm paying a price that's pretty close to what I pay for it, I'm okay giving up some of that, where I normally want a discount, uh, because I'm getting this yield right away, and I think they're picking good markets that I expect them to appreciate, and so I think it wouldn't take very much time to get to a point where I'm not upside down from a price, what I paid to the actual value standpoint. Um, but I do, when it gets too far, I get a little nervous about it. And so this is one I'm not sure that I'll invest in. I have bought several of their pad splits, and I like the model. So I want to actually dig into this is one of my other concerns with this one though. So this is the home next door, and this is the subject property. And this company that is running this one and the home next door is also running two others in the neighborhood, or maybe three others in the neighborhood. At least two others. So three total, or three here, and then I thought there was one more. And you can see A lot of them they've cut prices on. Now, I don't really know. It worries me a little bit. So when you look at the map, this is one of the densest parts of town for the pad splits. Now, it certainly could mean there's a lot of demand, but I think it probably also has to do with the fact that there's a lot of available inventory to buy properties right now. On the subject property, they're showing that there are two available rooms at the moment. Oh, let me zoom back in here. Yeah, there we go. Uh, yeah, two rooms left at the moment. So, two out of eight, it's, it fluctuates all the time, right? Occupancy in this type of model. So that might not be, the end of the world, but, you know, for that 13.5% yield roughly that they're projecting for year one, they have to be able to maintain last year's income. And you can see, okay, this went from 170 to 162. They're listing. They have some vacancy right now. Two rooms out of eight are vacant. Now, this is just what I'm getting from third parties. It's perfectly possible that this isn't accurate at the moment, right? Like we don't know this for sure, but it's something that it's one of the things that we can look at and see. You can see a lot of these have been dropped a little bit in their weekly price, 165 to 157. And so when we looked at all the Atlanta pad splits, Atlanta is the market where pad split started. And so it is the most mature pad split market in the country. You can just see tons of them. I think that I don't think there's a lot of risk of continued, a bunch of newcomers entering the market and pushing down prices. you know, Houston is much different, right? There are still quite a few in Houston. It's not like it's brand new here, but it's not as mature of a market for this type of product as it is in Atlanta. And so one of the things that I worry a little bit about, especially where there's so much for sale inventory in this little pocket here, is that and the yield looks so high is that I could, and this is why I'm really, thinking about all the other properties that are for sale here is I could go and buy one of these properties for 250 or, you know, maybe, 270, spend. It doesn't take a lot of money to cut it up to add the extra rooms. I mean, depending on how you do it, but, I wouldn't expect it to get me all the way to the 335 to do that and to to furnish it. And even if it did, if there's just the possibility to just buy a whole bunch of these and end up driving down the yield, like it just worries me a little bit from that perspective. I mean, of course, with real estate in general, you're never going to have a monopoly, right? There's always going to be the potential for competition. But when we're buying a property like this, and we're considering overpaying, right? Like overpaying from a sales comparison approach. I want to know that the income that I have from it is a durable business plan, right? And so then it's just something I worry about a little bit, especially because you've got somebody who's clearly just in this neighborhood owns several, and has bought a couple of these brand new construction homes and is filling those up. And we know that there's plenty of inventory for them to buy more. And so one of the things that I'm curious about and I'm going to ask is are there plans for us to buy more of these properties um, from out of this portfolio? And one thing that it's not completely clear to me is I guess I could have looked in the public records and I just didn't. So if anybody wants to take the time to do that, these might not all be owned by the same people. They might just be this might be a management company, right? I'm not sure. Um, but it is, it does make me a little bit nervous, right? Because we're basically overpaying from the house for just from its physical characteristics because of the income that we're getting there. But we know there's already at least this one player in the market who knows how to buy other homes in the area, has access to quite a few that are listed for cheaper than what we're paying. And so at the end of the day, like we still might be better off buying one that's operating and has the income in place, and we don't have to go through that construction project. But one of the things that start to get worried about, especially when I see a lot of these, one, quite a few rooms available, but also quite a few slashed room rates, is that our yield is in danger, right? Like, are we going to be able to keep that up? Is this something that some of the builders in that market are trying to sell this to new investors, right? Because that's one of the things too. Um, you see sometimes we saw that happen in the short-term rental market in some areas where you just had a whole bunch of players jump in and buy properties and really ruin it for everybody. Um, that I think that has forced the more institutional buyers to buy the type of stuff that Mogul, I'll show you the ones that that I'm buying on Mogul are these. I want to find the Houston ones. Excuse me. So the Wags is one I bought there. The Axelrod, you're having to buy these like really just stellar properties to do well with short-term rentals now. That's the way that we've competed in short-term rentals. Well, for rent by the room, because it's supposed to be affordable housing, I worry that the competition there is going to be competition to lower price and where there is a lot of available inventory in the for sale market right in that neighborhood, and you clearly already have somebody who's taking advantage of that, buying those, filling them up like this. Um, and there's, it just makes me worry that there's too much potential to put downward pressure on those rates because it is still a relatively young model, a new model in that part of, in this market in Houston in general. I don't know exactly how long they've been there. I know a few people that have had them there for at least, I want to say 4 years now. So it's not like it's San Antonio where we just hardly have any. But it's certainly also not like Atlanta where they, are just a proven and probably mature market there. Like I just don't think it's matured yet, I guess. And so because of that, I think it makes sense that they're able to pump out a really high return immediately. It just is, it just does make me worry. I worry about, am I, what does my resale look like for this compared to, some of these brand new construction homes at, this is the most expensive one, right? That's 348.9. This is, almost 200 square feet larger. Um, it's got a garage. It's just like higher end home. Now, obviously, it's not currently set up with 8 bedrooms. And so if you were going to do this model, you'd have to spend the money to do that. But at the same time, if you're just looking at a sales comparison approach, um, when you go to sell, if you don't end up having this next buyer that's also just looking for that same yield, or your yield gets impacted, this is a tough one for me. I don't love it. Uh, at the same time, it is, that's one of the things I spent a lot of time thinking about today is there one that's available that I could buy, add one bathroom because most of these are just two bathrooms, um, cut it up into 8 bedrooms, furnish it, and then pay for, say, 6 months of vacancy as I'm ramping it up, and be in it for less than 335. And I think that's, I'm not sure that you could, but you also have to remember that, that's not the only, that 335 is our purchase price, but then we also have, the mogul fee that we have to overcome as well. Uh, and I think on most of their deals, they really do a good job of that because it's, such a good yield, or such a, the property itself. I think, in the markets, I think they do a good job of. I'm not usually too worried about it. But when I'm already feel like we're maybe overpaying for the property, that's the only times I think you'll hear me mention it. So for me, at the moment, I don't think I'm going to buy into this one. It's too bad because I really like Houston as a market. I really like the pad split model. It does have, you know, very strong in-place income. It is it's just on the valuation side that I worry a little bit. Just on the, the real potential to add new competition right in the neighborhood, is the other issue. And then, I didn't love the crime map. I mean, it's, it's one of the things that you just have to deal with in a lot of markets, but it is, for me, I'd like to be like a little bit like if you look at, let me look at one of theirs that I did buy. Um, oh yeah, this one, I bought a little piece of this one, the Chelsea in Atlanta, Georgia. There was nearby crime on the crime map, but you had a nice little pocket that seemed like it was, sort of separate from that. Definitely the Decatur one was like that. I got a little piece of that one. So you can see on average, I really like their deals, and I'm buying a piece of most. And so far, the only ones that I haven't have been these ones that I've been concerned with. Is the value there, right? Are we overpaying just because we're getting that existing yield? Um, in some spots, it does make me wonder, like, could I just go to Houston, buy one of those, uh, ramp it up, and sell it to them for a premium? And I don't think there's enough profit built into it. I don't think you can buy cheap enough for it to really make sense to do that. Although, like you can see, this is a 1,800 square foot that sold for 235, right? So I mean, maybe you could, right? I mean, this is a for 100,000 bucks. This is could I spend 40? I think I could spend 40 to cut it up and add a bathroom. I mean, that doesn't seem be, obviously you'd have to like look at the home, figure out does that actually work with the layout. And then okay, furnishings, I don't think I'm spending another 20, so then 40, 20, 290 transaction costs. I mean, I don't know that there's really a business there. But it does seem like it I just like to think of it in that way when I'm comparing, like, does this deal make sense for me to buy it at this price? So I think I've hammered that valuation point enough. I don't think we really have to talk about the market anymore because I've talked about the Houston market quite a bit. Um, I did want to go back and point out, some of these. So it's been interesting. Most of them, a lot of them have sold out very quickly. This one, it's not even really live yet, and $36,000 is raised. Now, one of the things I thought was interesting, they did ask me if I wanted to buy the naming rights on this one, and it's not really buying, right? It's you just have to invest a minimum of 25,000. Um, be the first one, and I think it'll be a while before I'm putting that kind of money on the site. I want to get it like a year of operating before I start putting big chunks of money into each property. But which is why I'm just buying a little piece of every one that I like. So to try to get like a very broad experience of how they're performing. But if you look like some of them have been selling out like really quickly, and a lot of the Chelsea, the Andres, the Victor, those all sold out pretty quickly. The Johnson sold out. It actually took a little bit longer, but it did. And this was a big raise, I think, too, right? This was 655,000, so that's like three of some of these other ones. But then, you've had some like this Johnson 2 has been up for a little while. The Celeste, I was actually kind of surprised that this one didn't sell out. I think maybe it's partially because it's a pool. It is also it's a little bit bigger offering compared to it's about double what some of these that sold out real quick are. So if there's a lot of people like me that are just buying a little bit of each one, well then you're just it's going to be harder. Um, but I think it is a good sign that, like, I think there are a lot of us that are like having using somewhat of a critical eye when looking at properties and not just buying every single one that comes up. I think it seems to me that a lot of the ones the ones that where the value it's tough to get there. I mean, that was my worry about the Johnson too, even though it did appraise, right? And so um it did they add it in there? I wonder. Uh, I'll have to ask them again for that if not, but let's see if they uploaded the appraisal. Yeah, they didn't upload that. I'll ask them again. Um, but they said that it did, the appraisal did come in good. So I want to see that. But this is also one they're trying to raise a ton of money. But so far, it's been, not even, not much more than some of these that sold out real quick, right? So I don't know. I just thought that this was kind of interesting to look at and see. from that perspective, how it's going. And it does. I mean, these are ones. I guess again, maybe it's just that they're the more expensive ones too. Um, but they were ones that I was a little concerned about the value relative to the price. And then there was one of these, and I don't remember which one it was, that was a concern for me at first in Atlanta. But then when I really dug into the comps, I realized, oh, it's really not that far off. Um, you know, it- I think in general, I've mentioned lots of times, these guys are. I think they're putting out on average the best properties out of any of the platforms that I'm currently looking at. Um, but I'm just not going to agree on every one, right? There's going to be ones that we shouldn't, and that's why I think all of us should be, looking at these critically, investing in the ones that make sense for us, and then passing on the ones that don't, right? And the other thing is too is, um, as long as that yield holds up, like 13.5%, and if it grows, that's great. Even if it just stays, I mean, that's a fantastic. If that were to return forever, um, that's tough to beat that somewhere else, right? And so part of their problem that they're having now is they're having to compete with the other great deals that they're putting out, right? And then also with some of the high returns I'm getting with some of the discounted stuff on Lofty and different options like that. I got a video coming up on Saul's Lot. I'll be doing one where I bought and sold one of their, or bought one like a week ago, and I think we're going to redeem it this week. So that'll be a really great, annualized return, but not necessarily what you think of when you think about long-term real estate investing. Uh, anyway, yeah, I think that's plenty on that. Please like and subscribe if you haven't already. Tickle the like button or poke it, or any of those things. I don't know. I feel like it's funny people have all these different things that they say about the like button, and it's really not even a button, right? Like it's a spot on your screen. Um, Let me know what you think about this property though, right? Like if this is one that you're going to invest in, what's getting you over that pricing, the fact that you can just buy newer homes in the same neighborhood for less. Do you think that it sitting directly across from the park makes a big difference? The fact that it's just already laid out for pad split, and to replicate it would probably cost you a similar amount. I mean, what is it? What's getting you over that hump? What are you thinking about differently than I am? I'd love to hear any of those thoughts. And that's it. So until next time, I'm going to keep making mistakes so that you don't have to.